Joe, I don't know if you heard, but it's game over. Americans hit record consumer debt of $24 billion a month, and jobs are vanishing. Let's watch this together, and maybe we'll learn something, right? Of course, the stock market's hitting really close to brand new all-time highs. It's all my fault that we sold out last week. I'm just going to put it out there right there because, of course, we could see that it was going to go straight back where it was, right? Anyways, let's go back over to this. Game over.
Welcome back, everyone. Thank you so much for being here. Thank you for joining. If you're new, please make sure that you are subscribed to World Affairs in Context on Substack or Patreon for more and exclusive content. I would absolutely love to see you there. Just follow the links now. The official store just fine. In fact, we hear that the U.S. economy is the strongest it's ever been.
When you'll see numbers like nobody's
USA
ever seen before. The economy is doing amazingly well. I wish the press would report it, but people are finding out. They're seeing it. It's coming. It's becoming pretty evident. It's hard to hide.
Consumers are resilient. They tell you jobs are plentiful and growth may be slowing, but there's no real reason for you to worry. And yet, when you look at the data, which we're about to do in this video, it tells a very different story. What you notice when you look at the details is rising financial stress, growing uncertainty, and an economy that's very clearly losing momentum. It is losing steam. So
it's not losing steam, Joe. Stock market, right? Now, we did see that pullback last week, right? And we saw lots of videos saying this is the end, the path of least resistance, I believe were the words that were said, headed straight down to zero. And you know what? We did have a bearish trend for all of one day. Remember, we can't tell direction nor magnitude. Duration nor magnitude. We can only see direction. And on Thursday, the direction was down. And just that fast. Joe, totally normal. Hang on, from bottom to top. Totally normal. 3% move in the span of 3 days. Totally normal. Nearly 3% move in the span of 3 candles. Totally normal. Yeah.
Totally. And definitely easy to anticipate. Yeah.
Oh, yeah, of course. We knew, right? We, the outliers, we knew, but like all of you guys, you didn't know. You didn't have the Nancy Pelosi plan, right? We were just trying to fake you out, right? That's, even though I totally wouldn't have done anything about that if I were still in the U.S. investing championship, right? Totally wouldn't be trying to hide those things from you. No, nobody knew this. Give me a break.
It looks like we have a bullish cross of about 36 cents or something here at the moment too, right?
Yeah. I mean, legit. This close today will get us at right back to almost all-time highs. I mean, we're within a couple cents of all-time highs and a brand new bullish trend. And again, our trends cannot tell duration, cannot tell magnitude, can only tell direction. However, Joe, we've seen bullish trends for several months now, off and on, and we're basically at the same place we were in October, right? Again, I can tell you direction, but I can't tell you duration or magnitude. So
now would be a terrible time to invest, though, anyway, right? We're at all-time highs, and that's scary.
It can be scary to a lot of people. And this is a lot of what drives the fear-mongering, is that stocks are going to crash from all-time highs. Like they hit the ceiling and then instantly crash back down. That is one of the big fear tactics for a lot of YouTube channels, right? All-time highs are scary. No. Don't you get it? Once we push through this area up here, nobody, since Jesus walked the earth, who is still holding SPY, is underwater. Nobody, which means everybody's happy, which means they're going to go buy more, which means they're going to make their friends even happier when they're going to go buy more. It's a thing.
Yeah, I think we saw that from around April until June, just a few months ago.
Oh yeah. Yeah. Look at this. This whole way, right? This whole way, you're hitting new all-time highs. This whole way, right? Now, that's not scary. That's actually exciting, right? That's what playing ETF is for, is when you can just get in and go. You don't touch anything for a long time. But this has been a choppy market. No doubt about it. Let's keep going.
Start with the consumer, the backbone of the U.S. economy, because that's where the cracks are becoming impossible to ignore. On Friday, February the 6th, Federal Reserve data showed that in December, U.S. consumer borrowing surged by the most in over a year. In other words, Americans are maxing out their credit cards, they're maxing out their lines of credit just to make ends meet. That's it. That's what's happening. And that's a very sad reality that we're living in. Fed data showed that the total consumer credit outstanding jumped by $24 billion, which is a massive acceleration from the modest $4.7 billion increase the months before. So we're talking about month-over-month fluctuation, $24 billion.
That actually is a huge number there.
Dollars added in consumer credit. This was not, of course, just higher than expected. It actually blew past every single estimate, every single forecast. And importantly, this wasn't driven by one-off spending. Both revolving and non-revolving credit rose sharply at the same time. This is not a coincidence. It's very important to note here that these numbers do not include mortgages, so no long-term borrowing is included in these numbers. Non-revolving credit, so things like auto loans and student loans, increased by just over $10 billion. This is the biggest rise in 7 months. That alone should raise eyebrows. But the real red flag, as if that wasn't enough, the real red flag is what happened with revolving credit. Credit card balances jumped nearly $14 billion in a single month, the largest monthly increase in more than 2 years. Remember, this data doesn't include mortgages. This is day-to-day living financed at interest rates north of 20%. Is this sustainable? Absolutely not. This cannot go on for a long time. Someone has to pay back this debt. And unlike the US government, Americans are on the hook for their credit card balances. They must pay back their borrowing. And if they don't, what happens? What happens? Defaults rise, right? So, and I hate to be pessimistic here, but I do expect to see a rise in defaults later this year. Why do I expect that? Well, I actually have bad news.
So this is the kind of stuff I'd look at all the time in consulting. So give me just a minute here. This is interesting, right? So ever since COVID, the credit card and auto loans both have been going up precipitously. They are at the same levels as they were during 2009, 2010, right? That's a big deal. That actually is a big deal, right? This is the kind of stuff that I was looking for, by the way, on news kind of stuff to talk about. So I'm actually pretty happy about this. Yeah, these rising is not good, but it's okay. Brad's just going to declare bankruptcy, and it's all going to go. It's all going to go away. No big deal. No big deal. Thanks, Brad. Appreciate you, bro.
News for you, and I discussed this in great detail in my video that I uploaded yesterday. The labor market is crashing. January showed a 205% increase in US layoffs compared to December. Month over month, a 205% increase in layoffs. Just think about that. And we will get to that in just a moment. So maxing out credit cards is not the behavior of a confident consumer. It is the behavior.
Actually, it is the behavior of a confident consumer. That's exactly the behavior of a confident consumer. Because Joe, if I max out my credit card, it's fine. I'll just pay back later. It's no big deal, right?
I mean, especially if you're going to only be charged 10%.
Yeah, I mean, if that ever came to be. No. In fact, credit card debt is one of those measurements to say if people are feeling good, right? Think of it this way, right? If all of your investments were hitting all-time highs, maybe your house is hitting all-time highs. Every stock you bought is hitting all-time highs. Do you care about a little credit card debt? Who cares? Just charge it, right? That actually is the way to interpret it. Now, granted, it's a double-edged sword because, yeah, if that is going up because people can't afford their current lifestyle, that of course that's a bad thing. But it does go in both directions in this case.
Of households that are effectively filling the gap between stagnant income and rising costs with debt. That's what's happening. And that's where the timing becomes critical, in my opinion, because this explosion in borrowing is happening just as the labor market is starting to weaken considerably. In January, U.S. employers announced 108,435 layoffs. That's not a typo. That's not an error. Layoff announcements were up more than 200% from December, from a month prior, and 118% increase compared to January a year earlier. Even more striking, this was the highest number of job cuts announced in any January since 2009, right in the depths of the Great Recession. Now, layoffs do tend to cluster early in the year. It is true. And you may say, well, it's January. That's not that unusual. This happens because companies clean house, they restructure, they reset their budgets. And that is normal. But this January was not normal, not even close. And here's why. According to Challenger Gray & Christmas, the firm that tracks this data, most of these layoff plans were finalized at the end of last year. That means companies entered 2026 already expecting weaker growth, softer demand, and tighter margins. So in other words, corporate pessimism didn't suddenly appear this month or in January. It was baked in months ago. And here's where things get truly concerning in my personal view. At the same time that layoffs surged, hiring intentions collapsed. In January, companies announced plans to hire just over 5,300 workers nationwide. No, this wasn't just in one city or in one state. 5,300 workers nationwide. This is the lowest number ever recorded for the month since Challenger Gray & Christmas began tracking hiring plans into.
Wow, that is crazy. That is actually pretty crazy.
2009. This was lower than during COVID, lower than during past recessions. So absolutely unprecedented. When layoffs rise and hiring plans dry up simultaneously, as they do now, that is not routine belt tightening. That's not just cutting costs. That is a warning signal. There's more to come, and it will be worse. What's worse is that inflation is expected to rise this year. So some would argue that it might begin to look a lot like stagnation.
Well, hang on. Do you remember when the tariffs were first announced? And the consensus was this is the end of all time, right? Everything is going to be so expensive. It's going to be the worst ever, right? And that's not really come to pass. In fact, I don't have the data in front of me, so don't ask me for it. But from what I understand, it's actually been beneficial, a net benefit to the U.S. So I think this is another one of those fear-mongering type articles here.
This fits into a broader pattern that's been developing for more than a year, the so-called low hire, low fire labor market. Layoffs haven't exploded across every single sector, you may have noticed this, but hiring has slowed to a crawl. Job openings have been drifting lower and lower every single month. Workers are finding fewer opportunities to switch jobs, to negotiate better pay, to negotiate higher pay, or to climb that corporate ladder. There are just fewer opportunities for them. And so stagnation is brutal for households. Economists often describe job openings as a forward-looking indicator, and that's why it's such an important thing to keep in mind. Job openings tell you what employers plan to do in the near future, not what they've already done. And so when openings decline, it's a signal of hesitation, and it signals uncertainty. It signals that businesses don't trust the future enough to commit to hiring individuals, to commit to growth. They're not looking to expand. They're just looking to survive, in other words. And so that uncertainty is everywhere right now. And I'm sure many of you can relate. Let me know in the comments below what you see in your areas, what you see in your states. I would love to hear from you.
Okay, so decent amount of information here. And that's why I'm looking for these type of videos, right? Is I don't do macroeconomic impact stuff, and a lot of people do. So a couple things that were interesting of that, which were, number one, I didn't realize that layoffs had reached 105,000, whereas planned new hires were only 5,000. That's not so good. That's not so good. Not only that, but we looked at the chart of debt balances, growing as they are to a similar level from like the great financial crisis, right? There's a lot of stuff that could be not so great out there right now. But you know what, Joe? None of the doom and gloom matters, right? None of the doom and gloom matters if prices are going up. It's just a fact, right? You can come up with all the reasons why everything is terrible. You can come up with all the reasons why everything is terrible. But if prices are going up, prices are going up. Now, prices are not always going up, right? Look at SoFi. SoFi, bros, it's over. It's over. It looks terrible. Hang on, there was another one.
If you're an outlier customer, you got the inside scoop that we all took a poll on SoFi today to see which stage of the market cycle SoFi appears to be in.
Stage 2, giant, big, beautiful uptrend, right?
That's right. That's right. I doubt that's the winning vote.
I I mean, it's been on a sell signal since December 9th, and it has been getting worse and worse and worse ever since then, right? Down like close to 30%. Now, I mean, SoFi bros are probably like unable to sleep tonight because it's pulled back up 10% since then, right? Man, SoFi to the moon, right?
Yeah.
This right here is exactly what will get you into a ton of trouble, right? You look at this first couple of green candles and you're like, oh, we're so back, baby. I'm so glad that I held on to this, because here we go. We're going right back up to where we were, right? Even though we're down 30%, we're not going to count that. We're only going to look at how we're up the last 2 days, right? They're only going to look at the last 2 days.
And we're nowhere near a bullish cross. So this is definitely the time to get in on this thing.
Yeah, this is brutal. But dude, it's not just isolated to SoFi, right? We can look at a lot of these stocks. Apple, not so bad. In fact, let's scroll through several of these, right? AMD, I mean, that looks like I don't know. If we go way back, that looks like a stage 3 top right there, right? You got your stage 2. Stage 1 happened really quick. Stage 2, big move up, and then you got your moving average crossing over, right? Potential to have a stage 3. Amazon, stage 2, 3, potential 4. Hey, look at that. Cheesecake Factory. That's the safe investment right now. Cheesecake for life. What about PayPal? I heard that people like this stock. I don't know why. Why, because it looks horrible. Right. So here's the deal. It's that you don't have to buy stocks on the way down. Man, there was another one I looked at earlier. I forget what it was. And it looked very similar to this. Like, it had just been in a big, nasty, ugly downtrend for so long. I was like, what are these people doing? Is it MicroStrategy? Yeah, MicroStrategy. Look at this, Joe. Goodness gravy.
Oh my goodness.
Yeah. Just sliding for months, right? In fact, where's that? Let's see. Yeah, a recent sell signal, right? It seemed to bottom a little bit. The fear and greed was actually starting to drift a little bit more greedier, but then starting to get more fearful and came right back down. Now, here's the other thing I want you to keep in mind is that as you get a buy signal within a downtrend, that does not mean go long. That means if you're short, you might want to cover your shorts.
This is the most red I've seen on an outlier dashboard so far, I think.
Yeah. And yet, Joe, this was I think this was the number 1 top pick on Wall Street Bets this weekend.
Ooh, ouch. Yeah. Well, I guess if you're going short, right? Maybe it is.
Yeah. You know what? Maybe that's why they're so excited about it.
Maybe.
Look at Netflix. Let's look at Netflix. Yikes. Tell me the market cycle is not real, Joe.
Yeah.
Hang on. Where was that? Was it at 1 year? Yeah. Look at that. Tell me the market cycle is not real. Dude. And it's been on that sell signal since October. Goodbye.
It looks interesting down at the bottom though, right? There's a support. There's an order block there at the bottom, support. So, I mean, maybe it's about to hit stage 1. You know, time will tell.
Yeah, for sure. Let's see. JC. Is JC here? Or is that a stock you want to look at? JC, one of our alpha graduates. JC must be in the house. That's what he's looking at. FedEx. David wants to look at FedEx. Ooh, now that's a very different chart right there, right? That's a big, beautiful uptrend. Look at that thing. That is running like crazy. FDX, right? Joe, okay, perfect example. And why we need to make sure everybody understands this. Okay, look at the left side and the right side. Right? Imagine they could be like touching each other almost. They're so different.
Mm-hmm.
This, you don't buy the dip because you don't know how far it's going to dip. You want to buy the rip because you don't know how high it can rip. Perfect example of 2 stocks doing a complete opposite of each other. And you could have bought strength the whole way up. It even like churned through these order blocks right here. And then just absolutely getting destroyed every single day. Yeah, huge. Oh, I see. I didn't understand that. Got it. Cool. FedEx Freight is breaking off in June. Oh no, we got some insider knowledge. From Wild Stimpy Norwood. We're screwed. Nobody trade on that.
His friend is Nancy.
Okay, Joe, let's quickly go over our trading plan for the day, because my trading plan could be very different from those watching. Welcome to the OVTLYR Trading Room, invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So go ahead and subscribe if you haven't already. We got 3 main plans that we run: M, ETF, and sit in cash, and don't F up your portfolio. So when do we use each one? Plan M is our most profitable plan. This is the plan where we're aggressive on the market, which we're not today. Plan ETF is when we're defensive on the market. We're not seeing anything light up for plan M, but if we go back to the SPY, right, you can run plan ETF for ages and do really, really well, right? And then there's plan sit in cash and don't F up. So during the times when plan ETF is, or plan M is not set up, I put my money in plan ETF. When neither of these set up, I put my money in plan sit in cash and don't F up. And I am a professional investor competing in the US Investing Championship, and so is my friend Joe. So this is super exciting. So let's go real quick through here, right? Now, why would I not put on plan M today? So very, very simple. SPY is as of right now, maybe in a bullish trend. Let's go double check. Depending on when it closes, we got the 10 over the 20, price over the 50 within just 30 cents or so. So that's good. That's good. So we'll see if that holds. SPY has a buy signal. It does not. In fact, SPY is still sitting on a sell signal. Looking over here, the most important stocks in the market, the Dow Jones just hit a buy. Q's got to sell, SPY's got to sell, and SoFi. Let me take off NEM. Take this one off here. SoFi, the 4th most important stock in the whole market, is also sitting on a sell signal. Just putting that out there. Nothing matters except SoFi. SPY, fear and greed. So we're sitting on a sell signal already on the SPY. And the fear and greed here. I'm getting there. Jeez. This guy. Let me zoom in a little bit. This fear and greed is falling hard, Joe.
Yeah,
I don't think we're going to see a buy signal tomorrow. I really don't. Like, one thing you can do inside of OVTLYR is you can look for the turns on here, right? And those can a lot of the times tell you when a buy signal is coming or a sell signal is coming, right? You see it turned more bearish on the greed, more towards fear, and you got your sell signal. This one seemed to have bottomed a little bit, came up a little bit, and that's where your buy signal came. So if you ever want to try and front run the buy and sell signals, look at the fear and greed on the individual stocks. So yeah, I don't think we're going to be hitting a buy signal tomorrow. But since Dr. J is writing a prescription for money, let's go see what's going on full stocks breadth. Yeah, of the 9,000 stocks we cover, we're really, really close to crossing over on breadth. And then we're getting more uptrends than downtrends. So, I mean, it may start to flatten out, right? It may start to flatten out. So I don't think it'll be tomorrow we get that buy signal, but maybe in a few days, we'll come through. So because of that, I would not trade plan M, which leads us to plan ETF. Would we trade plan ETF? Let's go look, right? Uptrend in Qs and uptrend in SPY. Let's go look at Qs real quick, because I don't think they are looking all that hot. No, this is definitely a downtrend. The 10 is under the 20, price is under the 50. Oh, but Chris, it's going back. It's got 2 green candles. Yeah, I don't care. It's still trending down, right? Right. That's the point of having these 3 lines. Your short, intermediate, and long-term coinciding, all working together, right? And right now they are coinciding, working together in a bearish fashion. But that's not going to happen.
It's kind of the position you have to ask yourself. Are you a in the moment trader or are you a trend trader? Because right now the trend is not going up. If you're an in the moment trader or a gambler, maybe your plan tells you to get in. Yeah.
And everybody's got a different style, right? And you've got to come up with the style that works for you. You've got to come up with the style that works for you. SPY has a sell signal, Qs have a sell signal. So we're not going to go with plan ETF. So neither one of those are true. So the only thing that's left is plan sit in cash and don't F up. And in fact, in the US Investing Championship trading account, I am still sitting in all, where's it at? Portfolio. There we go. All SGov right there. I've made $19 whole so far, Joe. And this is some hot baloney garbage. You can take silver and throw it off a bridge. All right. That once in a ever move just ate up my profits. Now, I didn't have any losses, but boy, did that irritate me. And in fact, on this morning's live stream, Joe, we talked about how the one time in the data set that I looked at where it would have actually made sense to start peeling off your positions as it was going up was in the example where it went up 5 ATRs and closed at 1 ATR, which is exactly what happened to us. So yes, we could have done better by peeling off those positions earlier. But if it happens one time ever in our data set, and it's the one time since Jesus walked the earth that we've had a 30% down move on silver, I feel confident with continuing to follow the plan. The plan is not flawed, just bad luck, right? You got to look at it from that way, right? Is there a flaw in the plan, or is it just bad luck? In this case, just bad luck. That's part of it, right?
Yeah.
Joe, we covered a lot today. So I don't plan to be making any trades, at least for a minute. I'm going to continue to sit in cash, not F up, right? I'm going to get paid about 4.3% APY in SGov, which is roughly half the return in the market for doing nothing, which I think is a great place to be, right? Then I'm not messing up my portfolio as the market continues to chop around. Super tough, right? Shane, one of our Bravo students who's about to graduate on Thursday. Can you believe that?
Whoa,
the big graduation ceremony is happening on Thursday. Y'all be sure to come.
Wow.
Dude, Shane, I know. Why didn't I just sell the top? I didn't even think of that. I didn't even think of that, man. I mean, remember that one guy talking about silver? He was like, I sold all my silver here, but I still think it's going to go to 150. Shut up. No, you didn't. You didn't do a damn thing about it. You, my friend, are what we call a fake guru, one who talks out both sides of his mouth. What do I have in my long-term portfolio? Exactly what I have in my short-term portfolio, right? Remember, all stocks are bad. Every single stock ever in the history of time is bad. I'm not holding on to anything long-term, right? I only want to be holding on to things that are going. Only want to be holding on to things that are working. And if they ain't working, I ain't holding them. All right.
Hey, speaking of major events, though, isn't Mark Minervini coming really soon?
Oh, that's right. Yeah. Let's tease some things out here. Tomorrow, our final OVTLYR University class, which I'm excited about. Thursday, our OVTLYR University graduation ceremony, which I think everybody should bring Guinness. Guinness is not optional. Guinness is required.
Yeah.
Guinness is required. And then the Tuesday after that, not at normal time, because I got to work with these gentlemen's schedule, will be Norm Zada, and he is the organizer for the U.S. Investing Championship. And then the Thursday after that, February 19th, my birthday, is when we're going to have Mark Minervini on. So we got a lot coming on really soon. I think we have, as of right now, I think we're closing in on 20 people who have competed in the U.S. Investing Championship who we can learn from for our Champion Trader series. It's going to be really, really cool.
That's super really cool.
All right. That's going to wrap it today, Joe. So someone looking to save time, make money, start winning with less risk, what do you think they should do?
I think they should become an OVTLYR subscriber and head over to OVTLYR.com. And if they don't want to be a subscriber yet, do a trial membership and you will find it's the right tool to be a trend trader. And then check out one of these videos here to learn more about it.
Sounds good. Click one of them videos. Have a great day. We'll be talking soon.